Hey, good afternoon, everyone. Today is July 5th, 2021. Happy 4th of July weekend. Hope you're enjoying your long weekend here. Tomorrow morning, Tuesday, we'll be back with a live trading session. You can tune in to that over at eminimind.com/VIP. And we'll have a bit of a shortened week. Not a ton on the economic news front, but let's jump into a little bit of market analysis to kickstart the week. You can see on the S&P and the ES chart here the two retracements that are both at their negative 23% target. So I'll get rid of the smaller one here just so we can clean up the chart a little bit. And at this point, making it to a 4400 seems super likely. If we take a look at what happened a few months ago, the last time let me go to the S&P SPX here. So if we go back to February, we made the high in February. We pulled back a little bit. We broke that high just a little bit and then put in a nice higher low that was right about the 50% retracement. And then that took us into a very strong push into new highs. And you can see how the trend line went kind of pretty straight up. And then we went back to that 45-degree angle up here, had a little bit of a little break, double bottom, and we pretty much moved sideways through like the middle of April to about the middle of June. And so now, and you can see that same pattern though. See this, the high we made in May, kind of if we're replicating this scenario, we put in a high, we went just a little bit higher the very next month, just like back here in March, made that pullback, pulled back right to the 50% retracement here, and we are now off and running into a steeper up trend line like this. And we could look for what I'm sort of anticipating here is a similar movement where rather than coming straight up and then falling straight back down, what seems likely is a bullish run up and then a little bit of tapering where the trend line goes from really steep down closer to that 45-degree line. So I'm not going to aggressively short up here or aggressively put on a hedge. Last week, I believe it was, we had the announcement of allowing stock buybacks. And with a lot of the economic news that came out as well, things are looking pretty bullish. And so it can be a very bad place to be when you're thinking the market can't go any higher. I have to keep shorting this market. And you try shorting on the way up, and it just keeps blowing through. Not the healthiest approach. So if we look back here, we can see we were just below that 4,000 mark when we put in that second, when we broke the prior high. We hit the 4,000 mark and we went 200 points in the ES, 4,100, 4,200, and we kind of based at that 4,200. So now if we kind of transpose that to where we are currently, we were sitting at the 4,200. We were kind of just underneath the 4,250 here on this swing high. We touched it on the second push, and so if we project up to 4350 where we're at, and then 4450, or if you want to just use 4400, but I think 4400 is not that far away, even though it seems kind of far. If we just tapered off a little bit, we could easily get there, and so 4450 is not unlikely as well. If we look at the corresponding volume, these last couple of up days did have an uptick in volume, and as you can see here, a little bit of an uptick in these gap ups on the initial push into new highs. So we are moving away from the top of the trend line, kind of just like back here, and so that puts the top of the trend line as sort of the pullback point, as opposed to when we were riding on top of the trend line, the pullback point was the bottom of the channel. Now we're on top of the channel and breaking above it. So we'll pull back to the top of the channel once we do slow down and flatten out, would be where I'd be looking for us to pull back to. If we go back to the ES once more um, and zoom out, you can see this uptrend line that I have drawn just to kind of keep me in check and remember that, okay, we've already gone really steep up once and then moved sideways. And now as we go really steep up the second time, look at where the negative 61.8 is, 44.70. And so right between that, or right close to that 44.50 that we were just talking about. So I do think we have some upside potential for sure. And if we do start to pull back, it may only just be, a day or two, even 3 days of a quick drop, and then some basing, and then um, either right back at it, or even going sideways is still bullish at this point. So the other thing I wanted to touch on the VIX, I'm not. If we get down to like the 11 and 12 region, that's when I would get really interested in buying some put protection as a hedge. But at this point, mid teens, not really too exciting. We did see a drop in the 10-year treasuries last week, and looking like it wants to fall further. Good for tech. A lot of the tech here making really strong moves last week. The last thing, or what I want to close out with, is if you had to boil down really the secret to investing, that could be stocks, real estate, pretty much any asset that you're going to acquire, even the crypto space. The secret to investing is waiting and the importance of time. And so whether you're buying a house or you're buying stocks, waiting is where the value is, where you create that gain. So, if you are new to the markets,